Before you buy or sell a single ounce of silver today, you must watch this entire video because the real reason behind the crash is now exposed. We finally know why silver was smashed down to $71, and the truth is far bigger than anyone previously imagined. This was not just margin hikes, not panic selling, and not merely political headlines shaking fragile markets. It was not just the Kevin Warsh nomination or the yen carry trade unwinding at the exact moment silver tested 71. President Trump signed a $12 billion order to buy the very metal retail investors were forced to sell. Reuters documented it, Bloomberg confirmed it, and the New York Times validated the information publicly. Today, I will show you the full timeline of this heist and connect every single dot. Let's show the world this community is global, awake, and watching every move carefully. Pause the video, leave your location, and let's walk through the evidence together. Pay very close attention to the dates, times, and sequence of events, because timing proves coordination. Thursday, January 30th, 2026, silver reaches an all-time high of $121.60. Gold peaks near $55.94 as euphoria spreads across retail investors and leveraged momentum traders. Financial media celebrates a precious metal supercycle, while analysts raise aggressive year-end targets. Everyone believes silver is headed to $150 and gold to $6,000. This moment marks the top, though almost nobody recognizes it at the time. Friday, January 31st, 2026. The crash begins suddenly and violently. President Trump nominates Kevin Warsh as Federal Reserve Chairman, signaling tighter monetary policy ahead. Markets interpret this as the end of easy money and react immediately. Gold plunges 9% in one day, its worst decline since 1983. Silver collapses 27%, the worst single-day drop in recorded history. $3 trillion in value evaporates as retail traders face margin calls. Most believe the sell-off is complete and stability will return quickly. Saturday, February 1st, 2026, while markets are closed, the trap is set. The CME announces massive margin requirement hikes on gold and silver futures. Silver margins jump from 11% to 15%, a 36% increase overnight. Traders suddenly need $170,000 more or face forced liquidation. Banks are closed, capital is inaccessible, and options disappear entirely. Sunday, February 2nd, Asian markets open into chaos as margin hikes go public. Silver trades between 74 and 82, while gold drops to 45.65. Panic accelerates as leveraged longs realize liquidation is unavoidable Monday. Monday, February 2nd, 2026, becomes the critical turning point. Silver collapses to $71, down 43% in 4 days. Gold briefly touches 45.65, barely holding key technical support. Retail traders capitulate while momentum funds liquidate aggressively. Late Monday evening, President Trump unveils Project Vault from the Oval Office. A $12 billion strategic stockpile for critical minerals is announced. Media headlines focus on gallium, cobalt, and rare earth supply chains. But buried deep in Reuters and Bloomberg reports lies the real revelation. Silver is added to the U.S. Geological Survey's critical minerals list. Silver is officially designated a strategic national security asset. The government is now authorized to buy silver at scale. The announcement came at the mathematically perfect moment to accumulate cheaply. Trump did not announce Project Vault at 121 silver. He waited until silver had been crushed 43% to 71. If you wanted millions of ounces without driving price higher, this setup was flawless. Tuesday, February 3rd, 2026, the violent rebound begins. Gold surges 3% to $4,800 in one session. Silver jumps 5% to $83 as sellers realize the mistake. Physical markets reveal a completely different reality than futures prices. Shanghai physical silver premiums explode to $11 above spot. Normal premiums are $0 to $2, making this unprecedented. Chinese buyers offer $8 above spot for immediate delivery. Indian buyers pay $6 above spot without hesitation. Swiss refiners begin air shipping silver to Asia despite extreme costs. Air freight only happens when supply shortages become urgent. This proves physical silver demand never collapsed. Bullion dealers report multi-week delivery delays and sold-out inventory. Futures markets show backwardation, signaling immediate physical scarcity. A two-tier market forms between paper and physical silver. Analysts confirm this indicates futures mispricing physical reality. Translation: the $71 bottom was artificial. Meanwhile, JP Morgan issues a bullish buy the dip note at peak fear. They raise gold targets to $6,300 confidently. This occurs while retail investors are forced to sell. Geopolitical risks explode as Russia lowers its nuclear threshold. War trade demand returns instantly, reviving gold and silver buying. Everyone who sold the lows watches prices race away. This was a cleansing of leverage, not collapsing fundamentals. Weak hands sold while strong hands accumulated. Government procurement and institutional buying converged perfectly. Markets are not random when power plans ahead. The timing of Project Vault was precision, not coincidence. Paper prices can be manipulated, physical metal cannot. That asymmetry drives every major precious metals bull cycle. Volatility remains extreme and pullbacks are still possible, but core fundamentals remain fully intact. Gold reclaiming 5,000 would trigger renewed institutional buying. Silver breaking 100 would ignite FOMO rapidly. If those levels fail, consolidation may follow briefly. The pattern becomes undeniable when viewing the full timeline. The mainstream narrative calls this coincidence. The Gray Ledger asks you to consider orchestration. Comment below whether you believe this was coincidence or a heist. Share your price targets and strategy with the community. Subscribe for investigations mainstream media refuses to connect. This is the Gray Ledger, and we will be watching every move ahead.